We have watched stocks skyrocket this year after taking a nosedive in the fourth quarter of 2018. Most analysts have suggested stocks will beat their previous highs and will go on for the foreseeable future. There's just one question. If investors are net sellers of stocks, who's buying? You came here for the truth, so let me unveil that for you. Today we are going to look at what is happening in the markets today. We're going to take a deep dive. I'm going to show you the charts, show you the articles, get into all the data that you do not get in the mainstream. So let's begin by taking a look at this. US stocks at the end of March posted their best quarter in nearly a decade, but they did so without the help from investors in US stock mutual funds and exchange-traded funds, which have seen sizable outflows since the start of the year. Now, if you think to yourself, what the hell did this guy just say? He told me that money is leaving the funds, and yet the stocks performed extremely well. Well, we have to look into the data provided by the EPFR, which I've shown you on multiple occasions, as well as Lipper. So we have something that is quite an anomaly. It has happened previously, of course, but this isn't a typical event. So imagine this. Money usually flows in as well as stocks rising. Money flows out and you have the stocks falling. That's generally the way things go. However, today things are mixed up. We actually have posted outflows of $39 billion right now. This shows us exactly what's happening, and unfortunately it leaves a big hole into why this is the case. This is a chart that's associated with this article from Bank of America and the EPFR. Net fund flows to global equities. You can see the breakdown just showing you on the right hand side year to date. All of this really adds up to a large amount of money which has been leaving all of these different environments for the most part. The average investor has no idea what's happening here because they have their 7 shares and they're sticking with it. Well, we look into this a little closer and we start to piece the puzzle together. In this particular research report, the divergence between outflows and outsized gains perhaps can be explained by corporate buybacks, as the S&P 500 firms have repurchased $227 billion of their own stock in the first quarter of 2019. That's according to FactSet data, up from $143 billion in the first quarter of 2018. So they have considerably increased the amount of buybacks that they've been doing, even though back in 2018 it was a huge amount. So they're increasing this and they have helped to push stocks higher. A New York Times article back in February also made note of the disparity between stock gains and outflows, pointing to buybacks as a possible source of support for equities. Further into this article basically gets into the fact that this alone isn't enough to push this up because of the sheer amount of money that has moved. However, this is the one big factor today. Underlying all of this, we have central banks, and that isn't discussed here because they don't like talking about that. It's taboo. Don't talk about it. It's not good. Nobody wants to hear it, so just shut your mouth. Well, unfortunately here at the Money GPS, we don't do that. We look into the real deal, and that's what we're getting at today. We're going to talk a little about the central banks, and first I wanted to show you the breakdown of this. Goldman Sachs provided this chart. Corporations are the largest source of equity demand. This is actually as of the fourth quarter of 2018, but it gives us a good picture as to what is going on. You can see net US equity demand from 2014 up until 2018, and it just shows you that corporations are by far the highest of all of these compared with foreign investors, pension funds, mutual funds, and so on. Nothing even comes close. We keep hearing about the strength of these companies and how fantastic they're doing, but what about the buybacks? This is the real reason why they've risen so high. No, it's not actual fundamentals, and we'll talk more about that today. Breakdown of the S&P 500 cash spending since 2014. Just looking at this, I mean, come on. Over the years, they've been spending more and more and more on buybacks. So this block here in this color, they're all kind of bluish and grayish, but you can get the point. Looking at this here, that's the buybacks. 30% in 2018. The year before, it was 24%, and so on. It goes through there. Capital expenditures shows us 26%, whereas back in 20 2014, it was 34%. So you can just see the percentages there. I'm not going to bore you with all of them. But as time goes on, of course, they're spending more, but also they're spending more on buybacks. And that's very clear based on this chart as well as the previous one. Buybacks have contributed 260 basis points to the median earnings per share growth since 2004. This data is as of April 2019, so we're getting some new numbers here, just showing you the EPS versus the earnings, EPS being the darker blue and the lighter blue is the earnings. I just wanted to show you that as well. Technology stocks have reclaimed record highs, making them one of the first groups to put last year's carnage behind them. But everywhere else you look in the industry, bad news is overwhelming the good. Does that seem familiar to you? Bad news is good news? Well, let's look at this further. Profits are shrinking at an alarming pace. Valuations are reflating and politicians want to break the companies up. Semiconductor orders have slumped and spending on infrastructure to support the cloud is off, and yet the addiction won't break. Shares are up more than 30% since Christmas. Well, Mike Wilson from Morgan Stanley had something interesting to say. I can't remember a time in my career when institutional investors have been so preoccupied with what everyone else is doing. When investors are more focused on what everyone else is doing rather than the fundamentals, it's probably the end of a trend. And of course, everybody talks about this. There are cycles, and that's just the way it works. You have this period of time. It goes up and down, and I don't know where we are exactly, but many people say that this is the downtrend. Yes, the stock market has risen higher, but on a downward wave, and I don't think people understand what that means. But if you look at the Kondratiev wave, for an example, many people are looking at that right now, thinking that we are basically going down in a longer sense here. Now, with the quantitative easing measures that are being put into place, this can substantially prolong this bull market. You can see a crash in 2008, which still has yet to happen. The crutch is still holding it up. There's a bandage on top of it. So they know very specifically that this will result in stocks collapsing if they pull the crutch or the bandage off, but they're just keeping it going. And they have to continuously print money forever if they want this to continue. So it's all in their hands right now. Blinded by love. Tech stocks rise to record highs despite forecast profit declines. Just showing you the tech earnings growth on the top. This is very interesting because with all of the buzz that's been happening with Amazon and Apple, we are not really looking at the real details. Do these companies deserve to be at their current price? If there wasn't so much of this incentive to print money and to flush it out into the economy and to flush it out into the markets, this would of course be a very different story today. BOJ Balance Sheet as a percentage of the GDP, I mean, this is absolutely embarrassing. It has exceeded 100%. They are printing so much money today that it has gone into astronomical territory. Not even the US has gone this far. I believe at the peak it was somewhere around 25%. But I mean, we're talking about GDP, it's a fake number. The balance sheets, who knows what they're hiding. This doesn't really mean too much. I just want to show you the fact that they have printed an unprecedented level and it continues today. This country is in fact ruined and there's no possible way that it can be restored, but hey, who cares? BOJ ETF holdings, this is one that they will never stop, it seems. They started this program back in 2010, if my memory serves correctly, and so the idea was that they're gonna buy everything and anything because investors were not touching it. Now, what kind of precedent does this set? Not just for investors in Japan or companies in Japan, but all across the world. It's that you don't need to worry, you can do whatever the hell you want because the government or the central bank is gonna bail you out. Well, check this out. BlackRock's Rick Reeder says the ECB should start buying stocks. How many people think that that's a wise idea? Well, the chief investment officer of BlackRock is suggesting the ECB needs to get in there and buy stocks now. They have a lot of room to do this. They don't have to worry about inflation, so why not? As far as I'm concerned, all of the central banks are going to be doing this. We've already seen the talks. The Federal Reserve should do this next time. Next time there's a crisis, they should go in the markets and buy them directly. They always mention it beforehand to see the reaction, to see how the public reacts to it. If there's outrage, maybe they'll wait a little bit. But if not, they can get right in there. And I do believe that the public will not only accept it, they will beg for it. And this has happened. Look, they've already been buying all the toxic assets. Sure, who would want that, right? So take it off our hands, please. Thank you. Then you have the debt. Oh, sure, who wants that either? We're going to help everybody by buying up the debt. Such a helpful institution. You've been so great. Well, the ECB has been buying up all the corporate debt already. Isn't that enough? No, now they want them to go out and actually buy shares. Japan is doing it. The ECB, perhaps they're going to go ahead and do this. We have a big problem today, and it's only going to get worse if they continue to manipulate. It isn't fixing anything, and unfortunately, they're going to end up owning everything. I don't think that people understand what's happening today. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. If you want the financial education you weren't taught in school, these two books have everything you need. You can get all the details at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to find out more about the stock buybacks, what's been happening, the fund outflows, and all the details, definitely watch this video, and I will see you there.